Me now is Carey Hall, Bank of America Securities Head of U.S. Small and Mid-Cap Strategy. Jill, you're excited about small caps here, but during recessions, and you can argue about whether we're in one already or not, small caps typically underperform. So why? Why be excited here?
Thanks for having me. That's right. Small caps do usually underperform during downturns and during recessions, and we've seen that happen now. So, I mean, there's a lot of debate around whether we're going into a recession, whether we're in one. Our economists do expect that we'll be in a mild recession starting right around now, second half of this year, similar to the recession that we saw in the early 90s. So one of the milder ones by historical standards. But if you look at the decline in the Russell 2000 small cap benchmark so far, it's already been, more than 80% of the decline we usually see around recessions. When we look at small cap valuation multiples, so the forward price to earnings ratio of the market, large cap stocks are still trading, more in line with their historical averages. Small caps are trading extremely cheap, recessionary lows. So we think a lot of the bad news at this point around recession has been reflected already in small cap valuations, different than it might have been historically heading into recessions. And we see the size segment as better positioned in this macro backdrop.
Here's my concern, though, as I look at the way things played out in tech this week. You can look at, say, Alphabet versus Snap. Snap saw this dramatic ad slowdown. Demand there. Alphabet was a lot stronger because, in part, it's bigger, it's more diversified. Similarly, look at Microsoft versus smaller, cloud software players, even enterprise software players. Its size helped it out. Are you saying that all of that, kind of the disadvantage of smallness, is already priced into the small caps?
I think a lot of the risk around recession is priced in. I think there's a couple things that are going on. One of the reasons we've been more favorable on small caps over large caps, and granted, if we do see, a more severe recession, there could certainly be more downside risk to small caps at this point. But we do think large caps actually have more downside risk in that scenario. And, one of the reasons we've been positive on small caps over large is, based on the backdrop we're seeing, services spending this earnings season and in the recent quarter or two has held up a lot better than goods-related spending. Small caps overall are more exposed to services spending. We're also seeing, even though corporate guidance has been weak, guidance from small cap companies has so far been holding up better. And when you look at CapEx guidance and companies spending on CapEx, that's actually held up very well. And we found that small caps are more correlated with CapEx cycles in the U.S. than large caps are. So I think there's some fundamental reasons as well, and the fact that they've been more discounting the risks already.
Okay, so for the investors who follow along with you on this thesis, what are the risks? What are the potholes, whether it has to do with inflation, specifically with consumer spending? Where are small caps perhaps less protected? Should we see some surprises in the data over the next month or so?
Well, I think, one of the divergences that we've seen is that, services versus goods spending, where, you've seen downward revisions to the sales of more of the, goods and big ticket item exposed areas, upward revisions to sales for some of the more services exposed areas. A risk is if we see just a broader deterioration in consumption that puts that services spending at risk. I think, what's also a risk is that small caps are certainly lower quality. You have, fewer stocks that make a profit. Quality has been rewarded in this environment. But if you're a passive investor, if you look at the two small cap benchmarks, the Russell 2000 versus the S&P 600, the S&P 600 is a lot higher quality of a benchmark. It doesn't have as many stocks that aren't profitable. And that index has actually been outperforming the large cap indices year to date and holding up a lot better. So if for investors within small caps, we would definitely focus on quality. We do think it's, a market where stock pickers can be rewarded in these late cycle and downturn backdrops, lots of alpha opportunities. So focus on quality, focus on small caps that offer healthy free cash flow. That tends to be a rewarded attribute in this backdrop, and focus on stocks that can fare well if inflation stays high.
Okay. Got to pick your small caps like you pick your produce carefully. Carey Hall, thank you.